Hey Credit Warriors, Credit Shrifu here. You may notice I've got a little bit of a sunburn. I was actually out doing a Kung Fu demonstration this weekend in upstate New York. I'm going to make a vlog about it, I think, on my personal channel, so if I finish it in time, I'll put it on the end of this video. Alright, so we're talking about Self-Lender in this video, and this is a topic some people have asked me to cover. So Self-Lender, it's basically a service which you kind of lend money to yourself, giving you a CD-backed secured loan, which then helps to build your credit score. And it's a service which sort of tries to solve the kind of chicken and the egg situation of you want to build a credit score, but you need a credit score to apply for a credit card or loan or whatever in order to build your credit score, so you can't have one without the other, so it's like what comes first, the chicken or the egg? So yeah, that's basically what Self-Lender hopes to solve by providing you with a simple way to build your credit for a fee. So let's have a look first of all at the requirements, and then we'll go into how it works. So you need to have a bank account, a debit card or a prepaid card to fund the account. You can't fund it with cash. You need an email address because obviously it's all online, phone number, you need a social security number, you need to be a permanent resident of the US or a citizen and have a physical US address, and you have to be 18 years of age. Okay, let's go into exactly how it works now. So when you apply for this credit builder account, what happens is you choose a loan amount, let's say for instance $1,000, okay? They then create, Self-Lender and their bank partners create a loan for you of $1,000, but they don't give it to you, they actually put it into a CD in your name, okay? So the way this differs to traditional CD secured accounts is that you don't need to go to the bank with $1,000 up front, put it in a CD, and then take a loan and they give you a $1,000 loan. You don't need that money up front with this. So basically they create that CD for you, they put the loan money in the CD, it's in your name and it's FDIC insured, and you then pay off the loan each month with interest, and then after 12 months or 24 months, however long you want to do it, that's what their loan ranges between 12 and 24 months, they'll give you the lump sum plus interest from the CD. It does actually earn tiny amounts of interest. According to some reviews, it's 0.1%. Self-Lender isn't very upfront about how much interest the CD earns. They just say, oh, you can earn interest on the money that's in your CD, like it's a selling point. Well, you know, the interest is apparently so minuscule, unless that review is out of date, even if it's like double or triple that, it's still minuscule. Interest is so minuscule, it's totally outweighed by the interest you're going to pay on your loan payments. Okay, now let's get into talking about some of the costs. So when you set it up and you get the loan that's put into the CD, there's a one-time administration fee of between $9 and $15. And then as you're making the monthly payments, there's an interest rate of between 12 and 15.5%. And it's not based on your credit score, it's actually just based off of, you know, the loan period and the amount of payments. And you can, the amount you borrow is different. The lowest payment is $25 a month, and the highest payment would be $150 a month. So we're going to look at an example that's on their website now of borrowing $1,000. Your monthly payment would be $89 a month. Now if you divide 1,000 by 12 for 12 months, it's $83.33. But then you have the interest and the one-time initiation fee, which is $12, which is added into that loan, which, you know, 12 obviously is $1 a month, and then plus the interest takes us up to $89 a month. So you end up paying $1,080 and you get $1,000 back. So you've paid $80 for the privilege of building your credit through Self-Lender. Now the loan shows up as a secured installment loan on your credit report, and it reports to all three bureaus, and it will report the on-time payments each month as long as you're actually paying on time. And so if you're paying on time, it will increase your credit score, okay? Because payment history is worth 35% of your credit score. It's actually the largest category. So getting those 12 on-time payments throughout the year is really going to help you build your credit score. Because it's an installment loan, in theory, it should contribute towards the credit mix aspect of your credit score, but that's only worth 10%. So the much bigger aspect that it's contributing to is on-time payments. However, if you don't pay on time, there is a risk to this, because if you don't pay on time, potentially it can show up as a late payment, which then will damage your credit score. So let's look at how that happens. So if you are less than 15 days late in paying, there's no penalty, okay? If you make your monthly payment more than 15 days late, they add 5% to that monthly payment, okay? So it's a penalty of 5%, you have to pay 5% more. If it's more than 30 days late, then it does get reported as a late payment on your credit report, which will then damage your credit score. So you do have to still treat this seriously. It is actually a loan, even though the money is kept in a CD and it's in your name and it's technically your money. It's like lending to yourself, but it's still a credit product, and paying it late will still have the consequence of a late payment on your report and damage your score. Self-lenders say on their website, though, that if you can't meet the payments, you can email them, info@selflender.com, to discuss your options. I believe one option is closing the account early. There is a very small penalty fee of $1, but that could be an option, is just to close the account. And you can apparently close the account at any time. Now let's talk about some of the pros and cons. So essentially this is pretty similar to a CD-backed loan that you could get from a bank. The only difference is that a bank, you'd have to hand over a lump sum, say $1,000 at the beginning, and then they give you a loan and you're borrowing from yourself and you're paying interest on that loan. With this one, the big pro is that you don't have to hand over a lump sum at the beginning, okay? Another pro of this is that it kind of forces you to save. If you're someone who does have a little bit of money left over each month and you would like to save, right, rather than spend it, it forces you to put money into this savings account, and you're going to get a lump sum at the end. So if you wanted to save up for, say, a deposit for, a car, right? Let's say you want to finance a car and you do have to give some, a couple of thousand up front normally. You could build your credit score for that car loan and save up the down payment at the same time through Self-Lender. So that's kind of one advantage of this. Another advantage is that they do not do a hard pull on your credit when you apply. So if you're someone with damaged credit through bankruptcy or just late payments or whatever, and you've damaged your score, they're not going to damage your credit further by doing a hard pull like they would with a credit card application. So basically it's not determined by your credit score, all right, applying for this. It really doesn't take your credit score into account. They do apparently do a soft pull, which is more of an identity check, and obviously they do have to report to your credit bureaus. They report to the credit bureaus, which goes in your credit report, so they do a soft pull to check you out for that purpose, but the lending decision isn't based off of your credit score, which is a good thing. So it's basically anyone can apply for this as long as they're a US permanent resident or citizen. So from those points of view, it's good. All right, now let's talk about some of the cons of Self-Lender. And one big con that I can see is that you're adding an extra monthly payment on top of the living expenses you already had. So let's look at an alternative way of building credit would be with a credit card, all right, whether that's secured or not. The monthly payment on a credit card, as long as you're controlling your spending, it should be that you're just paying off your monthly living expenses. So let's say you spend $100 at the grocery store. At the end of the month, you then pay that off, and that monthly payment is money that you would have spent on groceries anyway. It's not an extra monthly payment like with Self-Lender. Now, if you're someone who saves, say, $25 or $89 each month anyway, then sure, you're just going to be putting that into your Self-Lender account instead of into your savings account, and that's okay. But for some people, they might be living paycheck to paycheck. You don't necessarily want to add an extra monthly payment. You could just go for the lowest option of $25, but, in principle, adding an extra monthly payment, having to pay extra money is bad. Now let's talk about interest rates. So their interest rate of 12 to 15.5% that you have to pay, okay? No matter what, you pay interest on this. Even if you're paying on time, you're still paying interest because it's a loan. It's not a revolving account. It's a bit high. It's on the lower end of what a credit card charges, but pretty much, it's quite a lot higher than a loan, okay? Loans, can be like 5 to 7%. Mortgages right now around 5% if your credit is good. Personal loans maybe 6 or 7% depending on your situation. If your credit's bad, then a bit higher than that, but not really as high as like 12 to 15%. So definitely the interest is high. And then if also you compare it to someone using a credit card controlling their spending, if you pay it off in full every month, you're not going to pay any interest at all. So with the example I showed of $89 per month, you're paying $6 extra per month out of pocket. Whereas with a credit card, if you control your spending well, you pay $0 extra out of pocket. So that's another con. Now let's look at who Self-Lender would be good for. Well, I think it could be good for college students because you only have to be 18 to apply for it, whereas some credit cards you actually have to be 21. So as a college student, you could do the $25 a month plan, and it's costing you a little bit of money extra each month, but it's not a huge deal. You could build your credit with it while you're in college, and then once you graduate, you've got a credit score there. It could be good for someone with damaged credit due to the fact that Self-Lender doesn't do a hard pull on your credit report when you apply. And if you have damaged credit, the last thing you want to do is applying for loads of credit cards to try and improve your credit that way and having hard pulls done and then getting rejected and then having to apply for another one, and you suddenly get a load of hard pulls, which damages your credit even further. So to use a method like Self-Lender, you don't have to damage your credit even more with a hard pull. So that's a definite advantage. And then another person this could be good for is just someone who doesn't have a lump sum to hand over for a CD-backed loan to build their credit. But they do have enough income that they can cope with an extra monthly payment of at least $25. So that kind of person it would also be good for. Now let's look at some alternatives. So for the student or for someone with a damaged credit, a great alternative to this would be just being an authorized user on someone else's credit card if you can find a suitable person who's willing to add you as an authorized user. Becoming an authorized user also has no hard pull, so for the person with damaged credit, you're not going to risk damaging your credit even more. And also for the student, there's no criteria to apply for it. It's not really based on your credit score because it's like the main account holder is vouching for you and helping you develop your credit. So being an authorized user is definitely a big alternative, but for some people they may not have a suitable person to add them as an authorized user. Then another great alternative for another way of building credit through a credit card could just be a low collateral secured credit card, okay? So for example, the Capital One secured Mastercard, you can generally hand over $200 and they'll give you a credit line of $200 and you just pay that off on time every month. You keep the utilization low as well, so that'll affect another aspect of your credit score, revolving credit utilization, keep that low. You can improve your credit that way as well. So that's also a good alternative for someone who doesn't have a large lump sum, but maybe they do have like $200 that they could spare to get a secured credit card. Another way, and this is the final alternative I'm going to talk about, is just a regular credit card from a bank that you already have a relationship with. And this is going to be for people who have steady jobs, they've been with a certain bank for several months, let's say probably 6 months is a good amount of time, and they've had steady pay going into that bank account every month. And basically with this, if you apply online for a credit card, because you don't have a credit score, you may get refused. But even if you get refused, go into the branch of that bank and talk to a banker. And this is what I did with Chase to get the Chase Freedom as my first ever credit card with no credit score. Basically, I just talked to the banker and he put in a recommendation for me to the credit card department and explained that I want to build credit. I have an account with Chase, I have regular payments going in, and he basically vouched for me. And I was given a credit card with no credit score. And quite a good credit card at that. So that's always a good alternative. Talking to your bank, asking about the options in person, and sometimes you might find that there's an option that doesn't cost you any money. So those are alternatives, but I don't want to bash Self-Lender because I think it is going to be quite a good option for people in certain situations. So yeah. Also guys, if you're interested, if you're a member of Self-Lender or you're going to join it, there is actually a referral program where you can refer a friend and get $10 for each referral. I'm not going to do it here because this is supposed to be an objective review, so we're not going to put a referral link. But just so you know, if you have family or friends who also want to apply for it, you can give them a link and you get rewarded with $10. Just on a side note, I don't allow referral links in the comments just because of the risk of scams. So if I do get referral links in the comments, I generally just delete them. Sorry about that guys, but that's just the way it is. Like I said guys, I was doing a Kung Fu demonstration at the weekend, so I'm going to be editing a vlog about that on my personal channel. I'll put a link to that on the end card of this video as long as it's done in time. As always, please subscribe for new credit card tips and tricks, and we'll see you next time. Bye bye.